The Iraqi Dinar today, latest news. The silence was broken not by a dramatic announcement, but by a subtle, almost imperceptible flicker across the world's most guarded financial terminals. For years, the reinstatement of the Iraqi Dinar, IQD, and the Vietnamese Dong, VND, on the international currency exchange. The event many had dismissed as a financial myth was a rumor that permeated online communities. But in the pre-dawn hours of this pivotal day, long before the New York markets had even contemplated opening, a few astute, early bird traders in London noticed an anomaly that would soon shake the foundations of global finance. It was the moment the years of waiting officially came to an end. This seismic shift began around 3 a.m. GMT, manifesting as unexpected surges in liquidity connected to minor currency pairings that involved both Iraq and Vietnam. Initially, the seasoned professionals observing their private screens were hesitant to trust what their data was showing. The IQD USD pair flashed an unverified rate for mere seconds, vanishing just as quickly as it appeared, almost like a phantom data point. It was dismissed as a technical glitch, a rogue algorithm running amok, or perhaps a deliberate system test. Yet just minutes later, the VNUSD ticker followed suit, returning the same pattern of inexplicable, high-volume activity that simply should not have been present in these specific pairings under normal market conditions. Forcing a deeper inquiry, the scattered disbelief soon crystallized into a frantic search for confirmation as trading desks and major bank headquarters began fielding urgent calls from their top analysts and most influential clients. The atmosphere in financial centers across London, Singapore, and Zurich rapidly transitioned from simple curiosity to a palpable electric current of adrenaline. Was this isolated event a colossal mistake, a coordinated test of resilience, or had a truly historic and monumental financial shift just been silently launched onto the global stage? The answers began to emerge with astonishing speed, cascading across the world's network almost simultaneously, proving the legitimacy of the earlier data. By 4:15 a.m. GMT, undeniable proof was confirmed. The Central Bank of Iraq had moved, publicly announcing the official reinstatement of the dinar onto major international Forex platforms. This monumental action was quickly mirrored by the State Bank of Vietnam, solidifying the parallel reintroduction of the Vietnamese Dong to the global currency exchange within an incredibly short time frame. The concurrent return of these two long-dormant currencies, which had been off the global trading radar for decades, instantly transformed widespread doubt among experts into stunned acknowledgement. It was an event that had been actively disregarded by mainstream economics, but was now playing out live, across every major financial screen. The gravity of the situation prompted immediate, high-level reactions from major global powers. In the financial capitals of Europe and Asia, emergency conference calls were convened, pulling together top bankers, central bank officials, and major financial institution leaders. Across the Atlantic, in the quiet corridors of Washington, D.C., urgent meetings commenced between officials from the U.S. Treasury and representatives from the International Monetary Fund, IMF. The central focus of these discussions was to analyze the implications of this unprecedented event and strategically coordinate an appropriate and measured response that would maintain calm within the highly volatile environment that was rapidly developing and manage the inevitable global financial shockwave. The most critical and attention-grabbing pieces of information were the initial, live exchange rates flashing across the screens. The Iraqi dinar was hovering around $3.91 per US dollar equivalent, while the Vietnamese Dong was moving decisively toward 0.47. While these numbers were initial and subject to the inevitable fluctuations of a newly active market, their very existence and level instantly triggered a massive global response. It confirmed the full reinstatement of two currencies simultaneously, marking a singular historic moment that had no modern precedent, signaling the dramatic return to life for two sovereign currencies within hours of one another. The news spread like wildfire beyond the guarded walls of the trading rooms. The digital sphere erupted in a frenzy of activity, with social media platforms instantly becoming the epicenter of global conversation. Hashtags related to the IQD and VND live rates and the Forex Reset 2025 began trending across the world. Online communities and dedicated forums that had been relatively quiet for years suddenly overflowed with overwhelming excitement, disbelief, and a shared sense of vindication among longtime enthusiasts. The digital pulse of the global community was racing, fueled by an event that had just shifted from speculation to certified reality. Individual traders and currency holders worldwide began sharing screenshots and validated conversion receipts on platforms like X, formerly Twitter, verifying that genuine IQD and VND trades were successfully settling in real time across different global financial centers, including Dubai, Singapore, and Zurich. This tangible evidence showing real money moving at real rates provided the irrefutable confirmation that the change was not a theoretical exercise or temporary glitch, but a fully operational financial reality. The collective emotional response was immense, marking a powerful moment of shared validation for a global community that had patiently believed in this event for decades. Back in Baghdad, the news generated an atmosphere of national elation unseen in years. As the news filtered through local television and social media networks, thousands of Iraqi citizens poured into the streets and rushed to bank branches. People holding on to old dinar notes expressed their emotions through tears, laughter, and overwhelming celebratory joy. This was far more than a simple economic development. It was viewed as the fulfillment of a long-held promise and the symbolic reassertion of the nation's financial sovereignty and strength on the global stage. It was a day to celebrate national pride reborn. The Central Bank of Iraq released a concise yet profoundly significant official statement, formally declaring the nation's full return to international markets and referring to the event as a monumental day for the country's financial sovereignty. This was a powerful symbolic message that resonated deeply with the Iraqi populace, signifying not just economic recovery, but a fundamental re-establishment of their nation's fiscal independence and dignity following years of geopolitical and economic instability, confirming their solid place in the new global financial order. Halfway around the globe, Vietnam experienced a similar transformative wave. In the bustling financial centers of Hanoi and Ho Chi Minh City, banks opened with extended hours to accommodate the massive yet orderly crowds of citizens eager to participate in the financial transition. The State Bank of Vietnam confirmed the official reinstatement and upward revaluation of the Dong, emphasizing that the move was conducted in close coordination with a network of established global financial partners. The government proudly framed the event as a historic restoration of Vietnam's intrinsic economic value, matching its currency's standing with its emerging global manufacturing power. Citizens across Vietnam lined up with a mixture of composure and excitement, participating in the exchange of older notes for the new internationally recognized currency. The Vietnamese government prioritized and communicated a message of stability and full security, providing a guarantee that every existing account, every savings deposit, and every single transaction was completely safe and fully secured. This focus on controlled, transparent transition was designed to ensure a smooth and confident shift into the new financial era for the entire nation, emphasizing trust and reliability. What few outside the high finance circles realized was the sheer scale of the preparatory work that had quietly unfolded for years leading up to this exact moment. Insiders revealed that the IMF and a coalition of top-tier international financial institutions had been covertly preparing for the reintroduction of dormant currencies under an intricate contingency strategy known as Project Phoenix. This comprehensive, secret operational framework was specifically designed to manage the immense complexities of this precise moment, ensuring a seamless reintroduction without triggering a financial meltdown, demonstrating a meticulous level of global financial coordination. The moment the IQD and VND went live on the Forex, the widely speculated and long-rumored Project Phoenix was immediately and decisively activated. Major international banks, including institutions such as HSBC, Chase, and Deutsche Bank, instantly launched their pre-established specialized protocols. These advanced systems were engineered to automatically and dynamically manage liquidity across all newly active corridors, rapidly update currency pair indices worldwide, and actively stabilize Forex trading channels to proactively prevent any wild, destabilizing market fluctuations, showcasing an impressive feat of advanced planning. For the professional traders watching the charts, the remarkably controlled nature of the shift, despite its immense scale, might have appeared almost miraculous. In reality, this control was the direct result of years of collaborative, multilateral financial and technological planning coming to fruition with precise, synchronized timing. As one analyst concisely phrased it, the entire global financial ecosystem had been subtly and silently preparing for this day, without even fully realizing the magnitude of the preparations, laying the necessary groundwork for a major realignment. Global financial markets reacted with immediate, sector-specific movements. The London Stock Exchange opened with a powerful surge, driven primarily by energy and banking sectors that had significant exposure to the newly strengthened Iraqi economy. In Tokyo, the stock values of Vietnamese manufacturing firms experienced substantial overnight jumps, in some cases soaring by almost 20%, reflecting a profound market confidence in the Dong's revaluation. Concurrently, prices for global commodities, including oil and gold, began to fluctuate significantly as traders were forced to recalibrate and update their models of global value chains to incorporate the new currency dynamics. Significantly, the US dollar, while retaining its dominant position, began to show a slight but noticeable pressure as major institutional and private investors started to diversify their holdings, recognizing the emergence of newly credible and stable currencies. Financial analysts quickly identified this as the definitive beginning of a multipolar currency era, a new global reality where economic power would be characterized not by the singular dominance of one currency, but by a more balanced, interconnected, and globally distributed network of economic powers, fundamentally changing the nature of international trade. Reports from Washington, D.C. indicated that Treasury officials immediately engaged in high-level, confidential consultations with IMF representatives, focusing intensively on managing public communication and global perception. The stated goal was to actively maintain market calm and prevent any form of financial panic, while simultaneously offering a measured acknowledgement of the obvious. The entire global financial landscape had been irrevocably altered. A policy insider described the efforts as a careful management of public perception, aiming to make this enormous monetary shift feel like a natural, inevitable progression, despite it being one of the largest financial realignments in several decades. Similar statements, urging patience, emphasizing caution, and confirming the live trading data, were issued by central banks across both Europe and Asia. The transformative shock of the event extended far beyond the realm of professional finance. Around the globe, ordinary individuals who had held onto the Iraqi Dinar and Vietnamese Dong for years awoke to news that could profoundly change their lives. These long-term holders, often marginalized and mocked as conspiracy theorists in the past, were now receiving profound validation. Social media became a gallery of deeply emotional posts, photographs of old banknotes carefully framed alongside family pictures, heartfelt messages expressing gratitude, disbelief, and overwhelming joy. The sentiment was powerful and unified, a shared sense that faith and persistence had finally been rewarded. For millions of people, this event was not merely a financial transaction. It was a deeply personal, psychological, and emotional victory, symbolizing a profound belief in the eventual restoration of value. Within the United States, unverified reports circulated that several specialized private exchange centers began operating under heightened security measures. It was suggested that pre-approved long-term clients were being invited to redeem or exchange large currency holdings through highly confidential, special exchange protocols, with some mentions of non-disclosure agreements and various tiered rate structures. While specific details were officially unverified, the existence of major real-world movement and the involvement of the world's most substantial financial players were unequivocally confirmed. The Forex community labeled the situation as controlled chaos, a term reserved only for historical moments, where the financial world fundamentally turns a new page. As the morning progressed across Europe, the International Monetary Fund issued a brief but authoritative statement, confirming the successful, comprehensive international reinstatement of both the Iraqi Dinar and the Vietnamese Dong, noting that both nations had fully met all necessary structural compliance standards. The IMF's communication made it crystal clear. This was not a temporary fluctuation or a glitch in the system. It was a permanent, fully official reintegration. The organization termed it an event of global significance, formally marking the full return of two major emerging market currencies to the global exchange. Behind the carefully chosen, polished language of the IMF statement lay the profound truth. The established global financial order had dramatically and permanently shifted overnight. Traders in Dubai successfully executed and confirmed live conversions between IQD, VND, and USD. Private bankers in Zurich were inundated with non-stop verification calls from clients seeking certainty. Forex trading desks in Hong Kong and Singapore remained open around the clock, operating at peak capacity. The era of business as usual had concluded. Every analyst, trader, and hedge fund manager was forced to immediately adapt to this new, irreversible financial reality. Even amidst the collective euphoria, influential economists urged a sober caution. The rapid revaluation and sharp rise, particularly of the Iraqi Dinar, presented potential short-term challenges, including temporary impacts on regional trade balances. Analysts predicted that import and export contracts across Asia and the Middle East would require significant, immediate adjustment. However, the prevailing expert consensus was that this short-term turbulence was a necessary precursor to achieving a fairer, more long-term global financial balance, where currency value more accurately reflects genuine national productivity and intrinsic worth, rather than outdated speculation. Back in Iraq, the government formally declared a national day of celebration and pride. Prime Minister Mohammed Shia al-Sudani addressed the entire nation in a deeply emotional, televised speech, powerfully declaring that the Iraqi dinar now stands once more as a symbol of our sovereignty, our stability, and our rightful place in the global economy. Crowds across Baghdad and Basra erupted in collective joy, with fireworks lighting up the night sky, people waving the national flag, and proudly holding their dinar notes aloft. It transcended being a mere financial event, becoming a powerful national moment of history reborn. In Vietnam, the government's message was equally resolute and empowering. Officials framed the reinstatement as the rise of a strong Vietnam, encouraging its citizens to remain calm, execute exchanges gradually, and place their full trust in the process and the nation's financial stability. The administration emphatically promised a system defined by fairness and full transparency. As daylight gradually spread across Asia, the entire world observed a nation stepping confidently into a new, self-determined era of profound financial independence. The images from Hanoi conveyed quiet pride, tears, and heartfelt embraces, the reward for decades of national patience. Across all major international news networks, analysts engaged in an intense debate over the probable next steps. Would this event trigger a wider, cascading Forex realignment across other currencies? Would the structural changes alter the fundamental way global trade and investment operate? A significant number of experts posited that this was only the initial stage, the first major movement in a larger series of potential economic resets designed to rebalance the global financial power structure. For the immediate future, all clear indicators suggested one monumental conclusion. The uncontested dominance of the US dollar was facing its most substantial, generational challenge. Inside the operational centers of all major trading firms, programmers worked tirelessly through the night, frantically updating complex algorithms and recalibrating the parameters of their automated trading bots. Every legacy system and application designed to handle Forex pairs required an immediate comprehensive rewrite to seamlessly integrate the live, newly active IQD and VND data streams. This immense logistical challenge simultaneously served as tangible proof of how deeply and rapidly the change had permeated the entire global financial infrastructure, turning what was once a quiet online theory into a massive, globally recognized financial update akin to the introduction of the euro. As the initial hours of shock gave way to the first few days, the global markets began to slowly achieve a measure of stability. The Iraqi dinar successfully held firm above its new 3 per dollar equivalent, while the Vietnamese Dong consistently maintained its initial strength. Central banks continued their coordinated silent operations, and governments issued measured, reassuring statements. The initial chaos began to recede, yet the underlying profound impact remained absolutely irreversible. The world had just witnessed the establishment of a totally new financial reality, one that decisively proved the power of persistence to rewrite even the most entrenched economic rules. Now, as the first light of a new day breaks over Baghdad and Hanoi, millions worldwide are waking up to a fundamentally changed world. It is a world where two nations,